Chief Secretary. I'd just like to turn to the loan schemes that have been announced and how they're working to get help out to businesses. And if I could start with the bounce back loans, which were announced on Monday and which I must say have gone down extremely well in Hertford and Stortford. What's the amount of bounce back loans that the government's anticipating that will be dispersed, both overall and over the next critical couple of weeks?
Well, you're quite right. I think they have been well received. And again, it responds to a number of points that the committee have raised in terms of providing that 100% guarantee. They will be available on Monday on a much more simplified process. So we will see what demand there is on Monday, but we would expect, based on the CBILS applications, that demand will be high, not least because many of the CBILS were for sums, the majority indeed of CBIL applications were for sums below the 50,000, which is what the bounce back loans will cover. So we'll see what the application rate is on Monday, but we would expect there to be a very large amount of demand, but linking also again to the other measures that have been taken, such as the £7.5 billion of grants that have gone, the tax deferral through time to pay measures. I think 57,000 firms have used that, the deferral of VAT. So there's a range of measures that firms are accessing, including overdrafts and conventional banking facilities as well. But the bounce back loans will be a key part of that.
You mentioned the overlap between the existing CBILS and the bounce back. How much of the lending that we'll see, I suppose, over the next few weeks under the bounce back, do you anticipate a lot of that being transfers from CBILS to bounce back loans?
Well, there is scope under the scheme to do so, should people wish to do so. So within the terms of the scheme, either at application stage or indeed if the loan, the CBILS loan has been granted, there is scope to transfer it across. So that is part of the scheme's design.
And will we see that transparently in terms of what's absolutely new lending and what would be a transfer from the CBIL?
Well, I know the chairman has raised in terms of data and what data there is available through UK Finance, and I know that is something UK Finance is in correspondence with the committee on.
Yeah, I think we'd all like to see it, timely and transparent data, so that we can see transparently what's happening there. It's mentioned a low standardised rate of interest. What do you consider to be reasonable, and would that be the same across the lenders?
Well, the scheme is interest-free for 12 months, so the government backs the loan and the 12 months without interest. The low interest to which you refer is what is applied after the 12 months. And I think, again, it responds to one of the concerns that has previously been raised around what interest rates would be applied by commercial lenders at the end of the 12 months on the CBILS scheme. And one of the distinguishing factors of the bounce back scheme is that there will be one loan after the 12 months, which the government will discuss.
Right, okay, thank you. And have you got an assessment of the losses that the government might anticipate we'll get from the bounce back loan scheme?
Well, a key part of what is being designed is in order to support the businesses, because these were viable businesses before, and the whole economic rationale of the interventions we're making is to ensure that these businesses can come back and be successful. There's a 6-year term to these loans, but the whole purpose is to ensure that the businesses are able to recover quickly. That is why we've designed the furlough scheme. That's where a big part of the fiscal measures, 42 billion according to the OBR, in terms of cost. So the big fiscal measure is in order to enable firms to come back. They were viable before COVID, and the underlying cause of the economic challenge we face is a health challenge. It's not driven by the economics, albeit the economics are the consequence. So we would expect these firms to come back, but it's very hard to model that without knowing what the MPIs are going to be, and depending on how long the disruption is, that will clearly have an impact on the future for those firms.
I mean, initially, and for a while throughout this, that the Chancellor's been reluctant to announce and to consider the 100% guarantee level. And we've talked in this committee, and we've heard about what we call the moral hazard. The fact that banks have got no skin in the game, and the impact of the risk of loss to the taxpayer and fraud that might come from that. I mean, how has the government assessment of that changed to bring in the 100%, and how will we mitigate against those losses or the potential for loss?
Well, you're right. I think a key part of the civil scheme was to ensure that the banks have some skin in the game, and I think in the evidence that the Chancellor gave to the committee, that was a key part of the evidence he makes. Clearly, here we're talking about a quantum of loan up to 50,000 that is very different to the quantum of loan that is offered through the civils scheme. So that's why there is the difference, and it's also why the application process can be streamlined. But alongside that, we are at the same time picking up on concerns that have been raised by the committee and parliamentary colleagues in terms of the civils loan itself, in terms of guidance from the regulators to firms as to how they handle those applications, the terms that apply in terms of the portfolio, the terms that apply in terms of the viability assessment. So streamlining has also been applied to the civils loan, which is why we've seen the significant uptick in applications being successful from around 3rd, 4th of April.
Okay, thank you. Certainly we are seeing an uptick. I think there are still some barriers that we've talked about on the committee to some of the lending, particularly for small businesses. And we've talked about the Consumer Credit Act making things more difficult. Have you considered changing or re-legislating on the Know Your Customer checks, which slow the process down, particularly for businesses which haven't lent before? What's your thoughts of those kind of barriers to small businesses in particular?
Well, I mean, if there is any sort of tweaks to the consumer credit required in terms of the bounce back loan, then obviously we'd bring that to the House. But in terms of guidance, the regulators more generally have been quite clear with lenders in terms of what those requirements are and addressing some of the concerns that were had before. And that's very much the sort of discussion that Catherine and her team and John Glenn, who leads on our relationship with the banks and the regulators as Economic Secretary, has been having in response to issues that MPs have raised. Okay,
thank you. We've also received evidence over the last few weeks that the accreditation process for the British Business Bank, when they look at the lenders, is quite slow. We've heard that I think they originally had 2 members of staff dealing with that. They've got 25 now, possibly more. I don't know. Is the process working better? Are there any needs for further change in that accreditation process?
Well, changes have been made to streamline that in terms of the rules around the portfolio as a whole, which have been eased in terms of the forward look, because I think it was quite difficult for firms to give some of the reassurance on the forward look on civils that the banks were asking for, but that we've also increased the numbers of approved lenders. So the British Business Bank has approved, I think, a 25% increase in those that can deliver this now to, I think, 52 approved lenders. So there's been a significant increase in order to, again, address many of the issues, which was how do we get these through the door and ensure that the money is getting to the firms that need it. But the bounce back loans, again, directly addresses this with a streamlined process, but additional things have been done on the civils loans. And we've seen that with the numbers and the significant increase in loans made.
Thank you. And I think I've just got time just to turn briefly to the large business interruption loan scheme, which I think we've only had about 8 days of that so far. Yeah. Do you have a volume of funds that we've got out onto the large business loan scheme?
And we don't have sort of clear data on that yet because it was only a week last Monday. There have been some approved through the large civils loans, so some have been successful and some applications are in, but the data is at a preliminary stage on that.
Is there going to be a limit or a barrier in terms of the fact that there are fewer lenders accredited on that scheme?
Well, I think the number of firms and sort of the profile of firms is different. Clearly, one of the big issues was just the volume of applications coming into banks, and the fact that that was coming at a time when banks themselves were suffering staff losses, and there was significant pressure on the banks just in terms of volume. I think the larger business loans is a different profile, as indeed the corporate finance facility through the Bank of England, which covers around 300 firms, but obviously firms which employ vastly more people. So I think the issues are different with the large loans, but we've already seen, even though it was only launched last Monday, some applications are successful. So it's clear that the process is working.
Thank you. I think my time's up. Thank you.